Hey, what's up, SilverTraderFM subscribers and viewers? Good morning. Today's Monday, August 8, 2011. Is today going to be Black Monday in the general markets? We shall see. So getting right into it, the big news of the weekend was S&P downgraded the United States creditworthiness to AA+ from AAA. Should have done that probably 8 to 10 years ago. So I submitted this broadcast to my subscribers, and hopefully you got it, to lock in your gold and silver. Hopefully you got some gold at 1664 spot and some silver at 3842 spot, which jumped up significantly this morning. And as of Sunday, I also submitted another broadcast. If you're into gold, Perry State Jewelry, one of my SilverTraderFM's, Mrs. SilverTraderFM's favorite channels, they were selling the Krugerrand 1 ounce for $17.14 based on Friday's close, plus a little bit of markup, while Provident was selling it for $17.45 and that max at $17.80 plus shipping. So hopefully you got into those deals. If not, there may be other opportunities. We'll see if there's a little dip here and there. So pre-market, stocks poised to tumble after S&P downgrade. Not a surprise. Right now the pre-market is tumbling down. S&P, NASDAQ down all over 2%. Tiny Tim, some headlines over here. Gardner wants to keep his job to keep the heat on. Standard & Poor's. He's saying that they've shown a stunning lack of knowledge about basic U.S. fiscal budget math. And he thinks drew exactly the wrong conclusion from his budget agreement, per Geithner. So anyway, I guess 2 plus 2 did not equal 4. 2 plus 2 equaled 2, but it didn't matter to S&P. You know, 2 trillion over 10 years, 4 trillion over 10. It doesn't really matter, because as long as you're going to be raising that debt ceiling, you're not really saving money. You're just spending less, or trying to give the illusion of spending less while spending more. Does that make sense? Anyway, you don't need any complicated math to figure out the credit worthiness of the United States. You just got to go to usdebtclock.org, right? I mean, look at this, 5.7 trillion. Hold on, this was year 2000. We took the debt clock time machine just to go back in time to see what it was in year 2000, about 11 years ago, right? 5.7 trillion is the national debt. We're actually the budget surplus of 191 billion. The GDP, right, gross domestic product, was about double the national debt, and an actual unemployment was only at 9 million. Okay, moving on to 2011. National debt right now is at 14.5 trillion, budget deficit of 1.4 trillion, and the GDP to national debt is almost 1-to-1, with only a few billion separating the two. Ridiculous. And look at this, unfunded U.S. unfunded liabilities, adding up Social Security, prescription drugs, Medicare, adds up to about $115 trillion. So the United States is truly over $100 trillion in debt. The actual unemployment is at 24 million. For this much of the workforce, about almost 20% unemployment. Okay, so if you tell me this is worthy of even a AA+, you gotta be kidding me, man. If I were to have this amount of debt, my FICO score would not be 800. It would probably be about 400, or even less than that, which may be equivalent to a D or even an F. So give me a break, rating agencies, man. It's just smoke and mirrors. Other news, European Central Bank intervention. The ECB, of course, intervenes again. They ended up bailing out Italy and Spain, buying government bonds for the first time Monday. Kind of rallied the European markets for a while, but the US market is about to open up, and the US futures are just pulling everything down, so sorry. My buddy Warren Buffett. Sorry, Mr. Buffett, it's you who got it wrong, not S&P. So basically, Buffett's been, supporting his treasury bonds. I'm sure that he's holding. He's saying that, well, the U.S. deserve quadruple A credit rating, while S&P decided to downgrade it AA. He also believes that the U.S. will avert a double-dip recession. Well, did you see 2008 and 2009 recession coming, or depression coming? I doubt it. I bet he was bullish all the way down to 666. Well, let's see why Mr. Buffett is so pissed off about AA plus rating of the creditworthiness of the United States by looking at one of his favorite company shares, his own, Berkshire Hathaway Inc., Class A, currently trading at 107,300 per share. It's down 10.92, almost 11% for the year to date. So could be one reason, right? If we compare it to physical gold, if he and his investors were investing in PHYS, physical gold, Sprott physical gold, they would be up 16.2% for the year, right? Or PSLV, physical silver, Sprott physical, they would be up 25.3% for the year, even with the bashing of silver as of May, right? Still up 25% versus down 11%. Hey, if I was Warren, I'd be pissed off too, right? I don't have any silver, I don't have any gold. Actually, he did. If he held on to it, he would be even richer than he is right now. Okay, on to the good stuff. Gold up 54, silver up 1.5, platinum up 12.4, copper, palladium down. As expected, silver and gold is up 3.9, 3.3% per this one-day relative performance. USD is right here, but should probably be joining orange juice down here real soon. We shall see. On to the charts. So the big news of this week will probably be gold, with gold bamming through these major resistance areas. Well, last week we closed, I believe, near or above, yeah, we closed above these two lines, which was resistance for the longest time for gold. And if we could close out this week above this candlestick, it'd be very bullish for gold. Above 1660, anywhere above here is a good sign for gold. Let's take a look at silver. Silver, on the other hand, has been lagging behind a bit. But maybe where gold goes, silver will follow. Major support here for silver at 37.8. We'll see if we'll continue somewhere within this green or purple channel. Let's see how things are trading. Gold was finding resistance at the 16.84 area. Then Sunday, when the Asian markets open, it BAM! Right through it with strength. Bit of volume, right? Good enough. Hit a high of 17.18 and going sideways for now. We'll see what happens when the US markets open. Silver, on the other hand, is lagging behind, where it made its high last week of 42.29 and going a bit sideways. I was hoping that it can hold this line right here of 39.7. It's fallen a bit under at the moment. Shall see. Oh, it's going down a bit, but we'll see if another support level will be possibly in the 39s right here. 39, 39.5. We'll see if it can hold that. I expect a bit of pullback when the US markets open, of course. Always bashing silver. But we'll see if gold can hold its ground on above 16.84 right here. I believe it can. I believe it'll try and hold it over here above 1700, of course. But we'll see what happens. So, other things I want to talk about is if you're planning on joining the shorting party, right? Here are a few stocks you can look at. ETFs that are inverse to market. So that means is if the market's going down, this share will be going up, the stock will be going up. So SDS is ultra short of the S&P. You can check out TZA. TZA is opposite of small caps 3 times. So you'll notice for the year it's already above it. 3 times leverage, so you got to be careful with these. FAZ is the financials bear, 3 times leverage as well. So for the year, it's actually been way up, even since June, July. So be careful with this one. It can pull back dramatically. It's not a buy and hold, it's a buy and trade for a day or two and get rid of it once you make your gains that you want. So that's it. So this is SilverTraderFM. Be careful of the markets in general, because it's going to be a bloody week, possibly a 5% down day on Monday. Keep stacking silver and gold. Stack that real money. Short the market if you want. Stay safe out there, guys. SilverTraderFM. I'm out for now.